Hi everyone, and very good evening. I'm sure everybody would be hungry by now after spending 7 hours. So this is the best business to present. I'm sure that after this session is over, we should take a break and take our families to McD today. And trust me, it is such a hello.
Let's continue.
Yeah. So and trust me, it is such a simple business that uh, you will enjoy the entire session. So just to start with, these are the team members. Vimal Agrawal, by profession, he's a doctor. Then there is Vinay Devedi. He's not there at the moment. Sunil Kumar also had to left for some personal reasons. Sameed is there. He's from Sholapur and he's studying and he's doing some job locally over there. And myself, Paresh. So, so we'll start the presentation now. So this is the global footprint. While the sheet is very cluttered with the numbers, so to make it easy, what we have done, we have identified the three important key QSRs across the world, and we have figured out that what is the exact potential. So what we can see that there is by FY22 we had 1,15,000 outlets for these three QSRs across the world, and the international business for them is they have a 77,000 stores internationally. That includes India as well. And within India, by FY22, we had close to 4,000 outlets. So it clearly shows that the potential is immense for India. We are just at 3% to the international, to the world business. And for the international, we are just 5%. And the beauty is that what has happened in last couple of years, so approx 15 years, last 15 years, the growth in the US market has been slow for these QSR chains. And that is the reason they have started focusing more into the international market. While they started into the market from 1965, they entered China and India at the same time, but the growth for India has been very slow. As we can see in the bottom left, the growth for the Indian market has been very slow compared to what China has been today. So this slide shows that how phase-wise we have progressed. So in the 1965 to 05, in the initial 10 years, the number of stores which we were being launched is just 25 stores a year. And fast forward today, in last 3 years, the progress has been immense. We had started the QSRs have started launching close to 500 stores in the year, which is very huge. As I said that the potential is immense. There is one more data to support that. So in India, as of today, we have only 3 stores per million population, whereas in China it is 13 stores. Which was just 6 stores till 2013. And the present QSR chains, the 5 big players into this business, they have till now in last 30 years, they have been concentrated too much into the top 30 cities of India. So to sum up, they were today in these top 30 cities, we have 66% of the stores available today. So as of FY23, we are close to 5,000 stores, out of which 66% is only concentrated into the top cities. So we can see the penetration in the on the right bottom, the penetration of the city-wise. So again, here also Domino's has been dominating in that area. They are close to 400 towns available today in India. McD is close to 103, out of which Westlife is 51 to 52 towns, and Yum, which is holding KFC and Pizza Hut, they are into 225 towns within India. So what is the size of this industry? So the informal eating market for India is close to 3.2 trillion. And within that, 68% is being held by the unorganized sector. And the organized holds balance 32%. Within that 32%, as we can see that the 66% of the business comes from the dessert, chicken, and burger category. And this is the area where the QSR, all the QSRs present in India today are very, very strong. So to further dissect this market size, so 1 trillion is approximately 1 trillion is the market size for the organized players, out of which 66,000 crores is the market size for the desserts, chicken and burgers sector. Now, as of FY23, as we ended up in the March, so it is expected that these 5 QSR partners hold close to 22% share within the 66,000 crore. So again, it shows that the potential is immense as the Indian public is going for the quality food. So they will definitely have a win-win situation in this scenario. So this on the right side, the two charts shows that we have close to 4,432 stores of all the five chains, and the ADS, which is to be noted that in last 5 years, the ADS for the sector for these 5 partners has been stagnant. But if we look for Westlife, it has been they have been growing from 1.32 lakh per day. The business has gone to 1.65 lakhs, and this is and the way the company is committed to the growth path. It is going to grow from here coming forward in the next 5 years plan which the company has laid out. And if we see the top line by these 5 partners, it is 14,217 crores. The growth has been, the 5-year growth has been 17%. Similarly, if you see the addition of the stores has also been the same, 17%. If we closely look to these numbers, while Devyani and Sapphire look, the value growth has been higher for them compared to Westlife, but the entire growth looks like has come from the addition of the stores, because the number of store addition has also been on the same trajectory. But in case of Westlife, we see the number of stores growth has been just 5%, vis-a-vis the value growth has been 12%. So it clearly shows that this management is into the business, that they believe of squeezing out more from the current asset. Now, just taking you through the company history. So they entered into the JV with McDonald's in 1995. And I will just highlight the key important dates. They started with the first drive-through in India. They were the first one to enter into this type of store, which was in December 2001. Then they found the opportunity in the cafe business, which was a higher gross margin product. They entered into the cafe business in October 2013, and similar has been the trajectory that they identify one area and then they work relentlessly on that area. So to sum up, if we talk about the management, whatever videos we have heard about the management, interviews we have heard, it clearly shows that they are into the building blocks. If we see the amount of the stores being added by the other partners has been humongous compared to what Westlife has done, or to that matter, McD has done. So it is also related to the store size, but still they didn't go haywire that competition is going aggressive, so we also go aggressive. They didn't choose that path. They kept calm and they kept adding the stores within the periphery, and they kept building that cluster, and then they moved ahead. So that strategy is helping them today to gain the operating leverage. Similarly, they also believe in nurturing the talent and holding back that talent. So all the key professionals with them are close to 20-25 years old within the system. This is about the current situation, current status of the Westlife. So they have 20% of the stores which are coming from the drive-through, and McCafe has been introduced into the 84% stores. And this is to improve on the experience. So they call it as experience of the future concept. So this is to enhance the experience to the consumers who are visiting to the restaurant. So this has been covered to the 70% of the stores right now. So if we talk about which type of stock we are talking today, is till now I would say that since the growth was there, but the profits were not being recorded. We would not be able to see the profits. So we see that till now it was a slow grower, but here on, since the back end, which was a asset heavy thing, which it has been developed now. The store addition which is happening, it will help to go for the operating leverage. And here on, we will see that this will be a fast grower category business. So before we go to the vision laid down by the management in 2000 for 2027, just a brief note that what management gave a vision for 2022, they ticked each and every box except one or two for on the store edition. They delivered everything which was being laid down by them 5 years ago for 2022. On the similar lines, they have set a vision for 2027, and these are the 4 pillars. We will drill these 4 pillars in detail in the consecutive slides. So if we see the meal strategy, so I'm the box which I'm highlighting, the pie chart, it shows that the 67% of the spends would be done during will be done during the meal time, that is dinner and lunch time. So categorically company has decided that they will do the menu innovation, and the marketing will be developed in such a way that this will help them to improve their ticket size during this phase, which is contributing 67%. And similar, and at the same time, they are strong in the other areas as well. During snack time, they are already the leaders for the burgers, and for the coffee also they are developing. Similarly, as I said, that coffee is a huge better gross margin business. So we see the potential compared to the international market, to the world, where the consumption for while in the restaurant side is done 42%, whereas in India it is just 27%. So it shows that there is a huge scope to grow on that cafe part. Now, this was one area which was lacking, omni-channel, which was lacking for Westlife or as a MACD till COVID hit us. Now, after the COVID, they realized that they will have to reach out to the consumers, and this has helped them to develop this gap, which earlier this baby was of only Domino's, who was the leader into this segment. Today, what has happened because of the COVID, they have prepared themselves to cater to this segment. Today, this off-premises business is contributing to 44%. But this growth has been immense in last 1.5 years. They were just 11% before that, and now today, as on date, they are at 44%. So the management has decided that they want to retain this to the 40%. So they will be working in that direction, that this business keeps on coming. The only at the moment, the thing is that they are too much dependent on the third-party providers like Zomato and Swiggy, but they are developing their platform so that the business starts flowing from their own platform, and that will help them to save the margins as well. Right now, they have to share the margins with the third-party operators. Now, continuing to the Vision 2027, as we all know that they are the leaders in the West market as burgers are concerned, but South has been lacking for them. Now they have realized that this has to be bridged, and the potential is also immense. As we can see in the left top chart, that South stores were in FY16. South stores were contributing 75% of the AUV. That is revenue per store. And today it has reached to the 90%. So it shows that South stores are progressing faster, and the more the company will penetrate in the South market, it will start giving them better results. Similarly, at present they are at just 25 towns within the South market, and they see the potential is of 60 to 65 stores. Similarly, they have started expansion in the smaller towns. So they have seen a better results compared to what their numbers are achieved by the metro and the tier 1 towns. So they have decided that the upcoming next 5 years, the store expansion of 200 to 250 stores, majority of the stores will be within the South geography, South India geography, and into the smaller towns. Now, the biggest question comes into everybody's mind, that this company has already reached to a level where the stores are delivering 6.3 crores of business per year on an average. So from this level, how it is possible to grow further. So to give the little clarity on that, we have the level of business, the average ticket size of these stores in the world market or in the China market. So we are just still in the halfway. If we can see, the world is at $2.4 million per year per store. We are just at $0.8. Okay, and to build on this, the company is also working on that, how we can improve that. The eating frequency has to improve. India is right now at 1.1 times per week. Frequency is just 1.1 times, vis-a-vis China is at 2.6, or the nearest other markets, most of the markets are twice. So if this develops, if this habit develops, then the growth will be a cakewalk for the company. So if we compare the top stores, so they have just this chart on the left side shows that while 6.3 crores is the annual average sales per store, but the top 10% stores, they are contributing to 11 crores of the business per year. So the tail is huge. Today they have close to 400 outlets. Only 40 stores are doing 11 crores on the average, and the balance, the 350 stores have to benchmark to reach to this quartile of 11 crores. And similarly, this 40 stores have to benchmark to the world average to improve that. So scope is huge. It is just the plan, the vision which company has laid out. It has to deliver, and in past we have seen that they have delivered that, and basis that we are confident that it will happen. That's why we gave this business as it's a small fish in a big pond. So if we see the margin structure, the operating margin they have been progressing and matching to the other partners. So they are right now at close to 16% in the current financial year. As we can see on the right top, the revenue per store, they are the highest. They are close to 6 crore, and none of the other partners is closer to them. So the bottom chart shows that the target which company has, goal which they have set is currently they are at 13% operating margin, and to reach to the 16% to 17% margin pre-Ind AS, these are the three areas where they have to work. So as I said, that they work in such a way that the operating leverage is set to play, because the backend expenditure has already been done. Now it is just the store expansion which will result into the higher operating margins. So this is one area where they see the 300 to 400 bips margin expansion will happen, and the other is the product mix and the cost saving. So these three things will help them to bridge the gap of the 13 to 17% of the operating margin journey. So the only concern area is that they have they have to share the margin with their parent company at McDonald's. So this is one area which we have to watch, and we will cover that in the antithesis part. And on the technical side, if we see that it is well above the V-stop, and it is right now it is consolidating in the stage 2, but the way the business has been shaping up, it is expected to take it to continue this stage 2 as per our understanding. And on the valuation part, so while the PE looks very high, it is trading at 105. So we have taken the cash pack, so which is coming to 250 crores. Since there is so much of expenditure which has happened, so we have added back the depreciation. So basis that it is trading at 45x to the cash pat value. And on the weekly chart, it is still above all the moving averages. So it is still in the consolidation phase of stage 2. So we have to keep watching on that. And the next is the thesis and antithesis. So Vimal will take it on this slide. Vimal, are you there?
Hello, am I audible?
Yeah, you're there. Yeah, we can hear you.
But I am not. Okay, but I am not seeing. Hello.
अच्छा, आपको दिख नहीं रहा है क्या?
नहीं दिख तो रहा है पर मुझे कुछ मैं नहीं दिख रहा हूँ. मैं दिख रहा हूँ क्या?
हाँ ठीक है, नहीं you can
Okay, चलो.
continue.
It's okay.
Okay.
Hello, Ishmael. I am audible.
Yeah, you're audible.
Okay. Now that comes to thanks to hello Harish for wonderful.
हाँ सुन रहे हैं, बोलो.
हाँ तो अब हम थीसिस पे आते हैं. तो थीसिस में मैकडोनल्ड वेस्ट लाइफ का जो है ना चिकन पोर्टफोलियो इज वेरी गुड. मैकडोनल्ड कमांड चिकन मार्केट का बहुत ग्लोबली बहुत अच्छा करता है. उनका बहुत आइकॉनिक प्रोडक्ट है. अभी मैक कैफे का इतना पेनिट्रेशन नहीं हुआ है, तो अगर 100% पेनिट्रेशन हो जाएगा और जो अभी 40% का कंट्रीब्यूशन है ना ऑफ द प्रोमाइसिस आ रहा है, मतलब फुल डिलीवरी स्पेस से जोमेटो हो गया, स्विगी हो गया. अब न्यू स्टॉल लॉन्च कर रहे हैं ये लोग, साउथ इंडिया में ज्यादा कर रहे हैं जैसे अपन ने प्रीवियस स्लाइड में देखा. और थीसिस में एक और ये भी किया जाएगा, जैसे डे बाय डे साउथ में न्यूक्लियर फैमिली रह रहे हैं, बोथ पार्टनर्स आर वर्किंग वीकली डाउन आउट, शायद 4 डे वीक भी हो जाएगा वर्किंग. ड्राइव थ्रू सक्सेस स्टोरी बहुत हुई है. एक इनका इन्वेस्टर प्रेजेंट में भरूच गुजरात का बहुत अच्छा प्रेजेंटेशन दिया है कि ये लोग कैसे वो कर रहे हैं. अब थोड़ा रिस्क की बात आ जाती है. स्लाइड थोड़ा ऊपर करो ना. हेलो लिटिल बिट. ये राजीव फाड़के का कुछ हैंड वो आ रहा है. ओके risk high and prolonged inflation impacting the variety of consumption basket. If it is happen, so QSR also will similar type of near-term changes. Reckless store expansions by existing brand and new brand awaiting to enter. If the brand continues the more space like 3,000 square foot store format, then also is impacting its revenue. Any non-linear upward change in royalty rate. At present, royalty rate is 4% since last 8 years. Okay, and COVID-like situations. Recently, they lay off the 16,000 worker of McD globally. That's something will happen, and I strongly 2 points also. Please, everyone watch the Founder movie of the Ray Kroc, and in this registration, McD sold 1.5 lakh hamburger within 10 minutes. So it's a really huge, and Jatia families walk the talk, and hope you're loving it. Thank you very much.
Thank you so much, Dr. Agarwal. Actually, yesterday मैं McDonald's ही गया था, तो I saw many kids having the McMeal, a happy meal. आज भी मैं McDonald's जाऊँ just to give myself a treat because I've been enjoying a lot of these sessions.
Yes. भूख लगने वाली जोरदार.